Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Hump Day, Hump Day. It's Wednesday, March 5th, actually, today. So let's jump into it. We got a couple economic news releases today. Kind of a biggie will be coming in at 11 o'clock, which we'll get into in just 1 second. But we'll start with the ADP employment number for the month of February. So we had 127,000 people, or new jobs created in the month of January, according to ADP for January, and for the month of February, it came in only at 139. So, of course, a lot of this is being kind of blamed on the bad weather back in the east and everything. So, they're kind of wondering how much of a factor this is. So, probably the next few months, they'll be kind of looking at least a little bit more closely as weather becomes a little bit more moderate and see if this becomes a trend or if this is going to improve at all, because they were disappointed when we had back last February over 200,000 jobs created in last February, according to ADP. Another item here is the ISM 9 manufacturing, or also known as ISM services index. So we had a 54% growth in the month of January. And anything above 50% is considered expansion. Anything below is considered a contraction. So the projector was supposed to dip a little bit to 53, and it dipped a lot more than they expected at 51.6. So two numbers here that came in very disappointing in terms for economic news. Now, the big news this week actually will be on Friday when the Bureau of Labor Statistics release their jobs numbers. Those are the big ones. But we do got this number here today. This will be released 11 o'clock Pacific Standard Time. This is the Fed Beige Book. Now, when this is released, this could give us some insight to the thinking of the Fed. And once the investors read this, if there's any surprises, so expect any possible volatility in the markets after 11 o'clock Pacific Standard Time, as this will be an important gauge for investors. Investors want to see what the Fed has been, what their thinking is, because there's been concerns that potentially they could, even though they've been on the record of saying that they expect the rates to be remaining low well into 2015, but there's also speculation maybe they could still raise interest rates even at some point this year. So this will be a good indicator as to see what the consensus is on the Fed members, or voting members anyways. So let's go ahead and take a look over at the headline news. Right now, stock market is actually, stock market is actually mixed. That's wrong. And sorry about this, folks. I'm getting a little ahead of myself here. So the stock market's actually mixed. Dow's actually down a little bit. There's some light trading on S&P and Nasdaq, which are up a little bit today. They're kind of light trading. So expect some volatility after 11 o'clock Pacific Standard Time. So here's the bond market, and we pulled back a little bit. We had a pretty big drop off yesterday, as they had a huge rally after the tensions eased in Ukraine yesterday. There's really no talk about Russia and Ukraine today, so that's not really being factored in today's economic numbers. So today we're rebounding a little bit. We closed at 104.50, and currently we're up about 104.59. So we're up about 9 basis points. We were up higher, so depending on the morning when the rates were released. But if you look at strictly right now, the rates have not shown any improvement from where we left off yesterday. But we do have some gauge as to some improvement there, especially when we're not hearing anything about Russia and Ukraine, where that could definitely pop up again. So don't be surprised if that could create some more volatility down the road, the geopolitical. And then also, again, as we mentioned previously, the Fed Beige Book could have some surprises. All right, folks, thanks for watching. I hope you guys have a great day, and stay tuned for tomorrow, as we'll have more jobs numbers with the weekly jobless claims. Have a great day.